I think bank stocks overall still look pretty good, actually, globally. I think it's not particularly constrained only to the Eurozone. I think it's globally still in a pretty healthy position with obviously yield curve, for example, even in the US steepening, that should help, right? We've got a pretty steep yield curve in the Eurozone as well. That helps as well. I think overall, just what you alluded to, that those kind of growth risks that we're facing now, that are, of course, at the moment, really mainly really centered around the US and not really in Europe. That should be helping European financials overall as well. At this juncture, I would say, however, that probably the European insurance sector, so SXIP, probably looks a little bit better because it isn't that sort of highly geared sector towards growth. So you're not making necessarily just a call on the higher growth really in the Eurozone, but it's mainly really a call on yields perhaps staying between sort of 2 to 3% in bonds, and obviously with slightly higher long end yields, that helps the insurance sector when we look at margins, when we look at profitability of the insurance sector overall in the last, let's say, 3 to 4 quarters. That looks really, really healthy. And as I said, right, it's not just a sort of a call on or the geared call on higher Eurozone growth.
So banking, insurance, what else? What other sectors do you like at this stage?
Yeah, look, overall, I think it is really a bit more time to play defense. I don't really buy into the rebound that we have seen over the last week and a half, in particular in the US. I think when we look globally, but also in the US, cyclicals over defensives globally, for example, in the last 6 months, they're actually up 4%, right, over the last 6 months. So they are really not pricing in any kind of potential economic pain that we're facing. So overall, I think it is still time to play a bit more defense, and particularly in the US, I think the likes of small caps, the likes of consumer cyclicals are the ones that you really want to avoid, and going more towards the defensives, your staples, your healthcare, perhaps even your utilities, utilities in the US, but also in Europe. In Europe, of course, that should help where European utilities are a bit more insulated from a stronger euro, where also perhaps you guys were talking about a potential Russia-Ukraine deal and the US-Ukraine deal on the mineral front that we've just seen overnight. A potential deal there also should give an extra kicker for European utilities, at least temporarily.